You have a great project. The numbers work, the location is prime, and the profit looks solid, but the bank still says no. Why? Welcome to the Real Estate Capital Desk. I'm Marc Renz. Today we're pulling back the curtain on how lenders actually think. Because in this business, a good deal is only as good as the capital that fuels it. Every day, strong projects get declined. It's frustrating, but it's rarely personal. It's about the questions you haven't answered yet. Reason number one, the repayment strategy. Lenders have one primary question: how do we get repaid? It's a simple flow on paper, but if any step is fuzzy, the deal is dead. The lender isn't looking at your profit margin first. They're looking at the exit. Remember this: profit does not equal repayment. Profit is what you keep. Repayment is what they get back. If your plan to refinance depends on interest rates dropping 2 points, or if your sale price is 20% above the highest comp, you don't have a repayment strategy. Reason number two, liquidity. This is where many successful developers get tripped up. Lenders look at your balance sheet. Net worth shows your overall strength and history of success. It's important. But liquidity? Liquidity is what keeps the project alive when the unexpected happens. And in real estate, the unexpected always happens. If all your capital is tied up in other projects, you're one permit delay away from a crisis. Lenders need to know you have the cash to pivot. Reason number three, a weak budget. Lenders are experts at spotting what's missing. When you submit a budget that ignores soft costs, site prep, or interest reserves, it sends a signal. A weak budget creates doubt about the entire deal. If you missed the contingency, what else did you miss in your analysis? The lender isn't there to fix your budget. They're there to fund a realistic one. Be honest about the true cost of completion. Reason number four, the team. Success in one area doesn't always translate to another. Maybe you flipped 20 houses, that's impressive, but that doesn't mean a lender will fund your first 40-lot subdivision. A good project still needs the right team. If the scale is new to you, the lender wants to see partners or contractors who have been there before. Don't take it as a slight on your talent. It's a risk mitigation strategy. Build the right team for the specific deal you're pitching. Finally, reason number five, the margin for error. Lenders run stress tests on your model. What happens if costs increase by 10%, or sales prices dip, or the project takes 6 months longer than planned? If your deal only works in a perfect world, it's not a good deal for a lender. Good deals need a margin for error. Lenders live in a world where things go wrong. Show them that your project survives the worst-case scenario, and you'll find the capital you need. So what's the bigger lesson here? It comes down to 4 pillars that every lender evaluates. The project, the sponsor, the structure, and the exit. These 4 elements must align for a deal to cross the finish line. You might have a perfect project, but if the sponsor lacks liquidity or the exit is unclear, the structure won't hold. Before you pitch your next deal, I want you to ask yourself 5 practical questions. Answer them honestly before a lender answers them for you. 1. Is the repayment strategy clear and realistic in today's market? 2. Is there enough liquidity to weather a 6-month delay without a crisis? 3. Is the budget realistic, or is it a best-case scenario that ignores soft costs? 4. Does the team have the specific track record required for this scale of project? And 5. Does the project still work when the timeline stretches or costs rise? Answer those questions honestly before a lender answers them for you. That is how you secure the capital your project deserves. Now, before we go, I want to share something a bit different. Maybe you noticed, or maybe we fooled you. What you've been watching is my AI avatar, but the experience behind it is 100% real. Every topic, every script, and every piece of advice is developed and reviewed by me and my team at Horizon Funding Advisors. We use this technology to share more insights with you more often. If you found this helpful, subscribe to the Real Estate Capital Desk. We're here to help you navigate construction lending, development finance, and bridge loans. What financing topic should we cover next? Let us know in the comments. I'm Marc Renz. Thanks for watching. We'll see you on the next desk.